Every minute you were earning 100% on your position, crypto is unlikely to recover anymore, objectively speaking.
The human factor plays a role here in the strategy.
Hedge funds immediately show up to try to poach you with a salary of $4,000 or $5,000. Whether that's going to be legal is another question.
I have software that can buy back what you came up with faster than you can yourself.
Everything has already been taken from you here a long time ago. No one even understands what this is. It's generally dangerous to keep such a large amount of money in one place. Because of memes, there will be a super cycle with tons of liquidity. Everything will be growing. Everything will be wow. It hurts, but we'll wait. We'll have a bloody Monday, but overall, that's okay. I don't have any money. I made it out of thin air. I just snapped my fingers like this, and that's it.
Hey everyone, you're watching the Axiom channel. Today our guest is Gleb Zemsky. Gleb, hi.
Hello, my friend.
Gleb is an entrepreneur, crypto investor, technical architect of algorithmic trading solutions, former co-founder of the Zero DAO project, Luna Ventures, and founder of EMC Capital.
Yes, those are 3 venture funds. And after those venture funds, I moved into algorithmic trading, mathematics, and that whole story. Right now, I have a private fund that I manage with what I consider to be a substantial amount of money.
Okay. All right. So let's start from DAO to algorithmic trading. Let's explain to people what a DAO is.
A DAO, in the classic sense, is a decentralized platform for managing finances or some kind of event and so on. But in our understanding, in our interpretation, and in most people's interpretations, it's more of a story where a certain number of people simply come together under some kind of banner, under some kind of company. In our case, it was syndicated investing. This is when a certain number of investors come together and jointly invest in various opportunities in crypto.
So Zero DAO was engaged in organizing a certain community, that is a DAO, right? Which would decide whether to invest in a project that was proposed to the whole community or not. So DAO is already like a collectively made decision?
In the classic sense, yes. However, here the key thing is the community rather than the decision. So here, we use the term DAO just for the sake of it. Rather, it was a gathering of people, a gathering of influencers who wanted to invest and stay involved.
Okay, so at the time, when it was the era of pre-sales, DAO was basically the best platform for testing, right? Testing the same hypothesis probably, right? Because through the DAO, a lot of people joined and helped, including testing the product and investing in it.
Yes.
So you also had some kind of testnets implemented, right?
Well, rather, the story is that in our case, it's an OL DAO, key opinion leaders, influencers who are united under one roof. And rather, we actively promoted certain specific projects so that our users would extensively use them and could also readily identify any potential bugs or issues within the project itself. So, roughly speaking, what we did and still do is popularize various projects in the CIS market.
Then why did you make the transition from DAO, from Zero DAO to algorithmic trading? Is DAO still alive in any way now, or has the whole DAO sector just faded away?
I'd probably put it this way. I was involved with Zero DAO specifically as a venture project because I spent a long time in venture capital, worked as a private broker, and EMC is built on a brokerage background. Yes, it's a brokerage fund. However, I got really tired of dealing with people. First of all, because it's an endless number of contacts. You're constantly in touch with investors, with projects, with funds. You spend more time in constant communication than actually researching or deeply studying projects. It gets really exhausting. And honestly, I just got tired of the endless chatter, and math is just math. You can shut yourself in at home. You just have numbers. Numbers don't talk. Numbers are silent. And it's much more comfortable, at least for me, to work with them. Even though I've been an extrovert my whole life.
So basically DAO.
Yeah.
You just got too tired of people?
Yes, but it's not just about DAO, right? It's worth noting that I left Zero DAO pretty quickly. Actually, in general, I exited all venture projects rather quickly because I got bored with them very fast. Yeah, same with Luna Ventures. I left very quickly. I left Zero DAO very quickly, EMC as well, very fast. So these are very rapid moves, literally in leaps. A leap, then a result. I understand how it works. When I lose interest, I exit.
If we look at the statistics for all the DAO projects, including EMC, which pre-sales were the best and which was the worst pre-sale?
In terms of ROI for retail investors.
Yes, and the downsides for retail.
I can't recall the downsides. There are projects that still haven't launched, meaning that after 3 or 4 years, they're still not out. In my opinion, that's probably the worst result. If we're talking about the best one, I'd say it was Supra, right? Supra performed really well. It was impressive. And for retail, there were a lot of X's, multipliers. That's probably all I can recall off the top of my head. There were a lot of projects, a whole lot. There was Partisia, I definitely remember that.
Now you've switched to algo trading. Did you carry over any principles you used when building and working with DAOs into this new field?
Absolutely not. At first, I tried to do that. I tried to bring together a group of people under one roof and start moving towards something together. But in practice, it turned out to be an unworkable system. And the algo trading market, the HFT, MFT, and arbitrage markets are very closed markets. Basically, people here are just not willing to communicate or share information with each other. Here, the most information you'll get is the ROI you make over the year. And maybe at best a general idea of the direction, right? Like start of arbitrage, funding arbitrage, text, and so on.
Hello, this is the Axiom channel. Our company develops Web3 products for businesses, and we address a wide range of issues related to the tokenization of your business and other products. We develop smart contracts, launch blockchain projects, and of course share our expertise through our YouTube channel so you can understand what cryptocurrency is. Subscribe to our YouTube channel to stay updated on news and new releases. This is Axiom.
Well, if everything is so closed off, let's start revealing information from the basics. Tell us, what is algorithmic trading? What is HFT?
Yeah, everything I just mentioned.
Yes. Now just go into more detail so people understand, because a lot of people write and ask, who actually knows about algorithmic trading? As for HFT, I've personally read about it a couple of times. Honestly, I don't really believe in it myself because I don't understand it.
So, what is HFT really? HFT stands for high frequency trading. This is when you trade in microseconds and milliseconds. In other words, basically, it's when every single moment matters to you. Most often, these are a kind of front-running, a kind of MEV attacks and so on. That is, it's a lot of work with speed, where you get certain information earlier. There is such a concept as information asymmetry. HFT, for the most part, plays with information asymmetry or with mathematical correlations. So basically, you notice certain patterns in the order book or on the chart, and you make money from these situations. If we talk about algorithmic trading apart from HFT, it's a story where you make money using certain algorithms that you develop. These can be completely different and distinct algorithms, ranging from some sophisticated, high-frequency trading, HFT algorithms, as we have already mentioned and discussed, to relatively simple automated models like systematically scraping Twitter data and then meticulously building comprehensive trading strategies based on the prevailing market sentiment or significant news events. There is a wide range of different possibilities. And in fact, a lot of things fall under algorithmic trading. Most people think that trading is just a bot that trades, say, on centralized exchanges according to certain parameters, right? I don't know, based on indicators. In reality, it's a bit different. And most hedge funds do algorithmic trading in a much deeper, more powerful, and much more interesting way.
Can you call something like the popular fast food chain Subway, or perhaps a meme bot that is specifically named Jarrett Subway ETH HFT Trading, a legitimate entity?
That's exactly what it is, yes.
That's what it is. Ah, cool. So basically, what you are saying is that your business and its overall results are all about the incredible speed and the very solid technical skills that you possess.
Technical skills, speed, math, if we put it simply.
Technical skills kind of give you access to good speed.
Yes.
Which blockchains do you use for this kind of work?
Solana, Base, and Ethereum for the most part, mostly.
To achieve rapid transaction speed on the Solana blockchain, do you utilize validators?
Custom nodes. Well, custom software for the nodes, plus all sorts of geysers and so on.
For example, if I want to set up a single network, right? How much would it cost me to prepare the infrastructure for this kind of work?
It's expensive. Yeah, it's expensive. Like, it goes into the hundreds. At the very least, you need nodes. Ideally, you want guys who have been running nodes for a long time and then install the software on them. And on top of that, you have to pay all those guys for it. The problem is that the market is very large. So how does it work? You have to understand that the market doesn't just have small teams managing some capital, but also large funds that are interested in this. The major problem in this market is the talent. And for example, at the moment when you're in some Russian institute, right, in Russia studying mathematics or advanced programming, as soon as you reach your second or third year, hedge funds almost immediately come to recruit you, offering a salary of $4,000 to $5,000. Here it's more difficult. A, to write custom software and optimize the nodes. B, to find a node runner because those same funds are offering them huge amounts of money for this. C, to actually write the logic for how everything works. The main problem in this whole story is that essentially the logic is the same everywhere. But the better you are able to optimize the entire process and the more effectively you implement your own innovative new solutions, the more substantial financial returns you will ultimately earn and the more significant achievements you can truly attain in terms of overall profitability.
But am I right in understanding that, for example, 3 years ago, this field wasn't as relevant? There were few players, and naturally those bots would just scoop up any order book getting in before everyone else, right?
Well, 3 years ago, it was a completely different market. It was a deep ocean. You could earn hundreds of times more back then. But again, you have to understand that information is just crumbs, and it's only shared peer-to-peer or through your own research, where you thoroughly analyze the blockchain and build your own theories about what's happening.
So in your business, the foundation is math and technical skills, and the human factor comes into play in terms of strategy. Is that right? And still, probably monitoring the blockchain is important because there are always new updates coming out. And projects also try to protect themselves so that your products don't get in at the very beginning, for example.
Well, actually, we're pretty organic on our own. That is, we don't really carry out MEV attacks like sandwich attacks and so on, as much as we focus on AFK strategies or arbitrage. That's much more interesting to us, and you could say we're probably a bit healthier in our approach. So it's not so much about making sure the user earns less, but more about making sure the blockchain functions properly. For example, take Ethereum. It's been around for several years now saying, guys, we'll handle the memes, we're working on eliminating attacks and so on. If you go on YouTube or forums, there are a million solutions on how to do this. But do they actually implement them? No. Why not? Well, that's a good question. We can only speculate here.
One of the most famous, Jared from Subway.
Yeah, that's a classic that's the most.
Every time I check out a new token that someone launches, I already see Jared sitting there, scooping things up, buying in, sees some action happening, immediately sells and gets out. And then he moves on to another project.
Yeah, classic. Well, these are called AFK bots and AFK snipers on Solana. It's just a super popular thing, and honestly, it's scary. I mean, we've found wallets with a daily P&L of $1 million a day. They make $1 million a day, every single day. They're pulling in hundreds of thousands of % returns, literally, month after month. But with these kinds of algorithms, it's not just about having a deep understanding of blockchain. You need a deep understanding of market sentiment, a deep grasp of how the math works, and you have to find some kind of universal equation for when to enter and exit, and at what percentages, and how to exit so you don't get wiped out. This is the cutting edge of blockchain, the cutting edge of technology.
Am I right in understanding that this kind of technology can't be used in the standard financial market? On stock exchanges, I mean, in trading?
Well, there is stock arbitrage.
Yeah.
There is stock arbitrage, which people chase after, and I think they even do it manually sometimes, though I'm not sure. And
well, just imagine, in your product, for example, everything is automated in a matter of seconds, but there, it's all done manually. Obviously, if they automated things there too and did it in seconds, it would probably be faster. I wonder, is that even technically possible?
I don't think so. The stock exchange, specifically stocks, is absolutely unoptimized and works in a really terrible way.
The speed.
Yeah, so there's basically nothing there at all. And in most cases, it seems to me that just like in any other traditional financial market, everything here was taken over a long time ago. A long time ago, the same banks and funds sat down, made deals with people, and have been carving up this market ever since. I think there are resources that are simply not accessible. Yes, for example. Well, no one is saying that in the future, people might just start negotiating directly with the founders of chains about this or that.
I'm not getting into your project, just do your job properly.
Yeah, that's basically the story.
So we're going back to the 90s, right?
Yeah. Or on the contrary, they might negotiate. Okay, here's the deal. You give me certain resources and I completely take over this whole thing. So no one else gets in, it'll just be me. But I'll share the profits with you and do everything organically.
Mm-hmm.
Well, that's also a kind of peer-to-peer.
Or alternatively, it should be done by someone else, like, for example, the regulator. By the way, how does the regulator view this kind of situation? So, I mean, I've actually read that in the US, Turkey, and some other countries, they're introducing laws specifically about tokens and currencies, requiring compliance with certain standards and regulations. So how does the regulator view your activities?
Actually, I try to push this a lot in Russia, and in other countries we often discuss it as well. No one even understands what it is. I mean, I literally meet with some people, tell them about this whole thing, explain what it is. People just don't get it. In most cases, I think it'll probably take about 5 years before people realize what this is, how it works, that it's a new kind of finance, and that there are certain vulnerabilities here. Whether this will be legal is another question.
Well, actually, like we've just been given a field to work in, right? Technically, it's not anyone's fault that I have software that can buy up what you came up with faster than you can yourself. So who's to blame for that? Well, probably only himself.
Yeah, exactly. But here,
he knew what he was getting into. He knew what kind of technical situations he might encounter.
It's just a question here. For example, there's cross-border arbitrage, right? For a while, a lot of people were doing it. Why is that illegal? After all, it's basically a feature of the financial market. It's cheaper here, more expensive there. I buy here, I sell there. That's it. What questions could there be? But nevertheless, it wasn't exactly legal and was punishable in many countries. It's the same thing here. How does arbitrage work? It's cheaper here, more expensive there. I just snap my fingers and that's it. There's, well, something like non-circulating arbitrage. I won't go into details, just non-circulating arbitrage on flash loans. I offset the sale here with a purchase there in a single transaction. And because of that, I don't need any capital. It's a complex system, but it exists. So how do you regulate that? I don't have any money. I just made it out of thin air. I was just sitting there.
Life change.
Yeah, wrote something, boom, came up with $100 out of thin air. Well, I don't know, maybe that's fraud.
And how much does the current state of the market affect things compared to previous years? Specifically in terms of transaction volume, the launch of new projects, because you work with both new projects and existing ones, right? I mean,
No, in most cases, only the old ones.
So you only go for the old ones, just the old ones. By the way, why don't you work with new projects, with projects that are just launching?
We used to work with them. If anyone knows the Meteor platform, we built an AFK bot on Meteor. Before that, we worked with DCA, and in most cases, the tokens and assets that are interesting are the ones with volume. Because volume means opportunity. If there's no volume, there are no opportunities. For example, if we compare Solana, which has 9 trillion in volume, to some random shitcoin on Solana with 1 million in volume. There are millions in volume there. Well, it's nothing special. Right now, the main thing we're focusing on is funding arbitrage and futures arbitrage, because the volumes there are super high and the capital capacity is large, which is also important. Because you can write software on Solana, you can spend a lot of time on it, but its capital capacity will be small. There, for example, a 400% yield on 100,000 is just 40% on 1 million. And you could spend, I don't know, half a year trying to show a 400% return on 100,000, but at the same time, you could just put 1 million into DeFi right here and now and get the same 40%. Yes, with higher risks, but still.
Agreed. Well, right now I see Panthera, Altab, they're coming back making loud statements again that they're ready to buy properties. I'm just curious, will they go for new or old projects? And in your field, could this have a positive impact or not?
We're more like, the people who come in afterwards. So basically, after a chain becomes popular, after it develops an ecosystem, that's when we come in. If we're talking about how often we look at new projects, rarely, honestly, rarely. Only when there are actually some real opportunities, that's when we notice it.
So like when Trump came out, did you look at the Trump token?
By the way, here's a funny story. We had AFC on Solana.
Yes.
What is it? Oh, on this one, on Meteor. What is AFC? AFC is an out-of-the-box strategy. This is the moment when you have fully automated software. It searches itself, it selects itself, it enters itself, it exits itself, it does everything itself.
Yeah.
We did this for the liquid pools on Meteor for the LLMs. And it was on the night of Trump that we turned off the software. I was sitting there, what was I doing? I think I was playing poker. Yeah, both during Trump and Melania, I was playing poker. I was just sitting there playing poker with the guys. And I start getting messages like, Gleb, 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 Gleb.
And when I woke up in the morning, the guys in the chat sent me a GIF. When you didn't sleep on such and such date.
Yeah, I know what you mean. Yeah, I had the same thing happen to me. But in the end, unfortunately, I didn't catch a ride on either Trump or Melania. And our software didn't work out either. But there was a chance to make some really good money. I mean, on Meteor, people were farming 100% every minute back then. Every minute you were earning 100% on your position. It was insane money.
That's cool. Okay. Apart from algorithmic trading, there's another trend that's been coming up a lot lately, though mostly in the background. It's about asset tokenization on the blockchain.
Oh, I love that topic, yeah.
What do you think about it? Tell us your thoughts. Because I read, for example, that Chainlink is loudly proclaiming that the next big trend is asset tokenization and that it will attract trillions of dollars. Are you and your team involved in the field of tokenization? And what do you personally think about this new trend?
I genuinely believe there are two significant things I would like to thoroughly articulate and express here. Since we're not only engaged in algorithmic trading, but also in DeFi investing. In other words, to put it simply, what actually interests us even more are DeFi investment strategies with the most publicity. We work with large capital, with high capital capacity. There are 2 points I'd like to make here. First, it's the stablecoin supercycle, which I strongly believe in and really want to see happen.
What is a super cycle?
Have you ever heard of Murad?
Murad, is that who you are talking about?
Yes.
Which Murad are you talking about?
The influencer.
No.
There was a very famous influencer on Twitter who was pushing the story of the coin supercycle. And the idea was that because of memes, there would be a supercycle with tons of liquidity. Everything would be growing. Everything would be wow. That didn't happen, but nevertheless, everyone picked it up very actively, both on Twitter and here in the CIS. So I'm rephrasing and rethinking this story and saying that there will be a coin supercycle for one simple reason. It's interesting to institutions. And this is essentially tokenization. Only it's the tokenization of real currencies. And if we thoroughly discuss tokenization itself and consider the significant directions in which it will ultimately lead, it truly represents the undeniable future for one profoundly simple yet compelling reason. It possesses the remarkable capability to truly and comprehensively optimize assets on a global scale, thereby positively impacting the entire economy as a whole. Because up until now, the only real use case for crypto was conditional cross-border payments, where it's difficult to swap one currency for another. That's basically it.
Well, yes, that's true. But honestly, I think USDT does a really good job at what it's supposed to do. Even if we look at cross-border transactions, it has long established itself as a payment tool.
Yes, but how often is it used and how easily is it regulated? What risks do you face?
I think it's not regulated at all. The risk I feel is that Tether could just say one day, guys, we're shutting down. But that's, well, okay, fine. But imagine a real scenario, Luna crashed. Yeah, it hurt, but not that much. But Tether has grown so big that if Tether collapses, it's going to hurt a lot.
Yeah.
And well, what would happen then? Honestly, I can't even imagine. Will all crypto assets start to decouple from the dollar rate? Yeah, they will, because it aggregates a huge amount of dollars. Everything goes through it. But honestly, I have no idea what would happen. At that point, you could just turn off your computer and go fishing.
Well, yeah, crypto probably won't recover objectively because, well, it probably won't recover for the next 10 years. That's how it is.
I mean, even when I look at the USDC to Tether pair, I get more Tether for my USDC than 1-to-1. So basically, it seems like USDC is actually paying extra to get Tether liquidity poured into it. So basically, to put it bluntly, USDC is also very dependent on Tether.
Honestly, I don't really understand this. We recently had a conversation, well, you could say it was with Tether, sort of indirectly, about the fact that we have large gold reserves and we want to deposit them into Tether. They offered us a 4% loan. So basically, they're saying, we'll give you a loan in Tether secured by your gold at 4% annual interest. I mean, they literally charge you for it. It's very strange, considering that most stablecoins actually pay you for providing collateral. And in this case, I think Tether could monopolize everything. But that won't happen for one simple reason. First of all, governments are not willing to tolerate some company coming in and, to some extent, controlling global finance.
Where are they registered again?
Yeah, it doesn't add up. It's some kind of offshore. That's the first thing.
Argentina or Brazil, something like that.
Offshore. And, well, something like that. And the second thing is, it's generally risky to keep such a large amount of money in one place because you're right. If Tether collapses, everything collapses. If USDC collapses, well, let it fall, it'll hurt, we'll wait it out, we'll have a bloody Monday, but overall it's okay.
By the way, look, there's another alternative. Have you seen the A7A5 token?
Whoa. That's a cool thing. Yeah, I've seen it.
It's really awesome. I think it's a very good entry into the Russian market. The day before yesterday, I was taking taxis around Moscow and saw a lot of A7A5 banners about cross-border payments in partnership with PSB Bank. That was honestly quite a surprise for me. I'm noticing another alternative. Last week, the ABCX exchange lost its ruble to USDT peg. Some other exchange went down for maintenance and stopped accepting cash in Moscow, while yet another exchange started accepting A7A5 in its order book and removed the ruble entirely. So in its order book, there is no ruble to USDT pair, only A7A5 to USDT.
Basically, it's worth mentioning that there was a certain earning opportunity there, which in the end, A7A5 just took over for itself. If we're talking about the story of what's ahead with A7A5, again, it definitely won't be A7A5. A7A5 is a story about banks. So the banks came in, saw that there was an opportunity and said, let's somehow neutralize it, let's take advantage of it, and they did. But at some point, the government will say, all right, guys, we're either going to nationalize you or, well, let's figure something out with you. But how do you nationalize a currency that...
Registered in Kyrgyzstan?
Yeah, the one that's registered in Kyrgyzstan. All the backing is in Kyrgyzstan. You can't exactly nationalize Kyrgyzstan.
Yeah, true.
But still, you have to come up with something. So the question is, what will happen? Again, we need to understand that, first of all, let's not discuss A7A5. It's a slippery topic.
Well, honestly, for now, A7A5 looks great to me. Why? For example, I want to hold rubles or I need to quickly hedge out of USDT because yesterday it was 107. Well, actually, 2 months ago it was 107 and today it's 84. And it would be great if I could simultaneously lock in somewhere, switch to rubles and then go back into USDT again. Because for now, well, we're not even considering card transactions. The volume is irrelevant. You can't process the whole amount there. You'll run into problems. Going for cash, well...
An option on the dollar?
You'll end up meeting in Moscow City and getting rolled up. That kind of thing has been happening a lot lately. But the technical ability to exit into rubles somewhere on the blockchain, wait, and then re-enter USDT, I think that's excellent.
Well, it's basically an option, just an option story. And well, why not? It probably even gives you some kind of neutral strategy in a way where you can simply lock in the exchange rate you're sitting at. For example, some exchange might give you the option to go short or long. You buy, say, A7A5 spot, then short it, and you end up with, well, relative to Tether, this neutral strategy for A7A5. You hold your position, and it doesn't matter to you whether it goes up or down. You just pay some kind of funding fee, maybe 30% annualized, and you're happy that everything is going well for you. But again, you can offset that 30% annual rate using some DeFi tools.
Well, you also need to find someone who will provide a trading opportunity, trading A7A5 somewhere besides spot.
Well, why not? After all, there are futures for almost all stablecoins. It's just that nobody trades them.
It's just that A7A5 hasn't been listed anywhere yet except, well...
RBCX.
RBKX and...
Yeah, but I truly think that this will be resolved over time, you know?
Well, alright, we'll see. Okay.
It's important that there are actual blockchain people involved, because in Russia there's a big problem with people launching projects without any real understanding of crypto.
On the back end?
Yeah, there could be people like that just sitting on the back end. Well, we'll see. Honestly, I want to believe that the first strong Russian stablecoin backed by a bank will actually have really good mathematicians and genuinely skilled tech people behind it. But we'll see how it turns out.
By the way, did you know that if you hold A7A5 in your wallet, you get an A7A5 token every day?
DeFi yield.
Yeah, basically they pay their clients 9% annual interest, and their system actually sends tokens to your wallet every day.
Right now I want to do pretty much the same thing, just in a slightly different field.
But you said that the guys there might not be good?
No, well...
They might be.
They still might be, yeah. I mean, hypothetically, there could be some mastermind behind it all. But actually, if they built a ref share system, they probably know what they're doing. Especially if it's not just 4 or 5%, but 9. And in rubles, 9 rubles.
Actually, their overnight, they make money off overnight rates. The general offer they give is 19 or 8. So look, here's how it works. Let's say A7A5 works, for example, with PSB Bank, right? Let's take an example.
That's correct.
They just release...
By the way, yeah.
They issue an emission that is a new one into the market. They can't just let her go. They issue it by putting money in the bank.
Security.
They put this collateral, and from this collateral they earn about 19 to 20%, like the bank's usual interest rate on a deposit. And from these 19 to 20%, they, let's say, take half of the yield for themselves as the issuer and for losses, and the other half is distributed over the amount they have issued to people. And that's the principle they operate on.
Well, actually, most stablecoins work according to this system. That is...
I hold USDT and I don't seem to be getting anything.
Because USDT, like I said, do you understand what the point is? It's the same system. Let's take A7A5, for example. If you go to A7A5, at least that's what I think, and say, guys, I want to deposit my token with you. They'll say, okay, we have overnight options and we have, say, collateral yield. We can distribute it to you and that's how you'll earn, right? It's less than 19 there, but still, you'll be earning. Most tokens there, yeah, we can take something like Resolve, which actually offers a fixed 25% fixed for providing liquidity with them in dollars. But here, well, you come in and say, guys, I want to deposit gold with you, tens or hundreds of millions. Let me earn 4%. The whole market, I pay you, I give you money for holding liquidity for me.
But here you pay me.
Here, yes, I pay. Why? And that's even with the condition that, according to rumors, right? From what we've heard, there are issues with collateral, that not everything is fully backed, and they want more collateral. But we'll see how it goes.
But actually, my question about tokenization was a bit different. Do you see real estate tokenization happening in the crypto space? Because right now I'm studying the Dubai market. We're currently working on a project for foreign clients, and right now we're creating a platform where you'll actually be able to buy a square meter with crypto, and all the data is loaded via API from the Dubai Cadastre. The Dubai Cadastre provides the average price per square meter through the API, uploads the purchase and transaction history of the property to its own blockchain, and uses that to calculate the average price.
That's cool.
So far, it all sounds really awesome. I'm really looking forward to seeing how it all turns out.
Sounds cool. I guess I see this more in some kind of, a very high value sector like crude oil, precious gold, gleaming silver, durable tin, I don't know, even flint perhaps.
I think they need to sell apartments faster. They really like selling a lot of them. So now if they allow people to buy by the square meter...
Well, it will be, back in the old days when I was into NFTs, we tried to tokenize both paintings and apartments. We tried to tokenize a lot of different things. At some point, I realized that it's just too complicated for retail. So you see, for retail to be able to buy that 1 square meter, if everything is clear here, I come in and say, I want to buy, submit the documents, and get it. This is a process they've known since childhood, right? His father, his grandfather, his great-grandfather, they all bought things this way. And here you can come and ask someone for help. But with crypto, it's all much more complicated because you need a wallet. You have to deposit money into the wallet. Then you need to swap that money, sign a smart contract, something that's just not very clear. Here, I guess the point is that the whole thing with apartments will come with mass adoption. When mass adoption happens, that's when the apartment story will work. For mass adoption to happen, it needs to be approved from the top, and for that to happen, there have to be real optimizations. Let's say, for example, even oil, right? Now, using Russia as an example, and CeFi as an example from another world, it's an on-chain entity, and the system is simple. You come in and say, this is my wallet. All tokens that will be issued from this wallet are my tokens. Okay, fine. You submit, say, an application to the central bank. You say, hello, my dear friends. Here is my very own on-chain entity, and this is indeed my personal digital wallet. Here, I present the complete and secure seed phrase for this specific wallet. It truly and unequivocally belongs to me. I am now looking to issue some kind of valuable oil token. Here's the physical oil itself, let's say. I have meticulously brought a verified document from the secure storage facility, carefully handed it over, and confidently stated, this is my genuine oil.
You'll get yours.
Yes, they say, all right, no problem. Here you go. And now, let's say 1 barrel of oil is backed by 1 token. And now you just go around the market freely, and every token transfer is a transaction. Instead of us sitting and signing 1,000 papers, you come and say, I need oil. I say, all right. Here's the website, sign the smart contract, that's it, here's your oil. And when the big players finally realize that instead of drowning in paperwork and building huge bureaucratic machines, they can do everything much more simply right here and now on the blockchain through tokenization, right?
They just use paper because it can be edited.
Yeah, like you can just change the numbers, all that stuff. Of course, we all understand that. But still, when some ordinary middleman who is perhaps contemplating the significant decision of buying an apartment observes his boss actively engaged in various activities involving cryptocurrency, that is precisely the moment when he will genuinely begin to consider and think about it seriously. Because again, let me remind you, crypto stopped being something shameful about 2 years ago. Before that, at any bank or investment company, people would look at you sideways if you said you were into crypto.
Okay, I agree. Great. Thank you. Also, at the end, I'd like to do a quick lightning round. There will be a series of questions you need to answer quickly and with short questions.
Let's...
HFT via Telegram bot, is it possible?
No, just...
Where would you launch a fund if you were starting from scratch?
Dubai.
What is more important, execution speed or model depth?
Model depth.
The best market for crypto experiments?
CX.
What's been the biggest shift in your thinking in the last 3 years?
Life is a game.
One important rule for evaluating a project?
Investors.
A book that changed your understanding of the market?
Thinking fast and slow. Let's go in that direction. Why not?
That's it. Great. Thank you.
Damn, this is a cool format. I liked it. Interesting.
Thanks for coming over.
Yeah, of course.
Very nice.
Thanks for inviting me.
Yeah, guys, thanks for watching until the end. Leave your comments, give us a thumbs up. Gleb's social media, Gleb's Telegram. If you have any questions for him, write to him. I think he'll answer. Have a great day, everyone.